heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco, and this is Bloomberg Technology.
Coming up, we'll talk all things chips as Intel wins nearly $20 billion of incentives from the US government.
Plus, the Biden administration weighs sanctions on Huawei's secretive chip network as the US seeks to curtail China's tech ambitions.
And look, we've got to talk IPOs. Reddit tomorrow, the company and shareholders guiding that they could price the offering at the top of its marketed range or above. Astera Labs, the CEO, joins us later as we expect to pop in those shares. Exclusive reporting, Ed, from Bloomberg. The US is considering blacklisting a number of Chinese semiconductor firms linked to Huawei. That's after the telecom giant, of course, made that significant technological breakthrough it seemed like last year. According to sources, we got to get into it with Bloomberg's executive editor for US government, Michael Shepard. Michael, it's great to have you on the show. And perhaps we've seen the reading of the tea leaves anticipating yet further action on Chinese names.
Well, I think you're right. What we're seeing is an extension of the Biden administration's push to keep China's chip making and technological pursuit in check. We have already seen them negotiating with the Netherlands, with Japan, with South Korea, and other countries to try to prevent China from acquiring the gear needed to make those advanced chips, like the one that we saw Huawei deploy in that phone last summer. What was interesting is that the U.S. was caught by surprise back then with that particular model of phone, which had a 7-nanometer chip. That was a semiconductor that the U.S. had previously thought was out of China's reach. And Huawei, remember, has also been in the U.S. crosshairs for quite some time, for nearly a decade.
Michael, we're just showing the list of Chinese domestic chip names that the U.S., according to our sources, is considering sanctioning. Swayshaw, PST, CXMT, the DRAM maker. What they all have in common, based on my understanding of the reporting, is existing ties to Huawei. Either they're an affiliate of Huawei, or Huawei has basically been using those companies to try and get access to chip-making equipment to which Huawei is banned or sanctioned from accessing.
Well, you're right. Huawei has been on this so-called entity list, this blacklist, since 2019, and that prohibits any U.S. company from selling technology to Huawei unless it gets special permission from the Commerce Department. And the concern is that Huawei may have been able to develop this advanced chip that I just mentioned by using some of these companies as proxies to help get some of the technology it needed to make that leap. And so now what the U.S. is trying to do, and Commerce Secretary Gina Raimondo has been very clear about trying to plug any gaps in access that Huawei may have to advanced technology. And likewise, the Commerce Department has also been pushing, as I mentioned, efforts to try to restrict China's access to chip-making equipment in other areas as well.
Okay, and it's important to note that the White House National Security Council, the Commerce Department, did not comment on our story. Representatives for all those Chinese domestic names that we showed didn't respond to comment. But the Ministry of Foreign Affairs in China reiterated to us that it resolutely opposes U.S. actions that disrupt market order and harm Chinese enterprises. Bloomberg's Michael Shepard out of D.C. on an incredibly important Bloomberg piece of reporting. Thank you. The other chip news, let's get back to it. The U.S. will award Intel $8.5 billion in grants and as much as $11 billion in loans to help the company fund an expansion of its semiconductor factories. That's the largest award from a program designed to reinvigorate the domestic chip industry. Here with me in San Francisco, Bloomberg's Ian King. We got on the phone last night with Pat Gelsinger. It's a big chunk of money. He told us he would have liked more, but he's pretty happy with it. Yeah. The main point is to onshore or re-onshore the semiconductor industry in this country?
Yeah, I mean, there are two things at play here. Obviously, the concentration of advanced manufacturing is currently in East Asia, predominantly Taiwan, but also South Korea. That, as we saw during the pandemic and this ongoing dispute with China, is a security risk, it's a stability risk. The Biden administration wants contingencies. It wants manufacturing in this country. It's backing Intel as the best chance of getting that. For Intel, they're on the comeback trail. They need money, right? And this is a big chunk of that.
Let's also think about some of the other names that are likely to be incentivized to build here in the United States, because it's notable the US name gets the big chunk of change and the announcement, but others are going to be receiving it from the likes of Samsung, for example.
Yeah, I mean, you can't just back Intel. Intel, let's be honest, has kind of fallen behind over the last 5 years. They say they're making a good shake of a comeback and that they're close to being back where they should be. But if you're looking at it from a purely objective point of view, then you have to back the winners as well, and that would be Samsung and that would be Taiwan Semiconductor Manufacturing, and both of those companies are building new facilities in the US.
I think Pat Gelsinger was honest with us last night that the semiconductor industry in this country over a 30-year period went elsewhere. Therefore, it's not going to happen overnight, bringing it back.
Yeah.
But walk our audience through the footprint of what they're trying to do. Arizona and Ohio are the focus. They also have plans for New Mexico. The $20 billion actually goes quite a long way towards getting things built.
It does and it doesn't. I mean, you've got to bear in mind one of these plants, 20 billion is just about going to cover it. So,
for the entirety of that one fab.
Right. So, I mean, and it's not actually building the factory, it's the equipment. It's what the money you give to Applied Materials and everything like that. So it's a massive amount of public money. But as you said, as you reminded us, he said, it's not as much as I want, right? This helps. This balances the economics. This makes investing in a U.S. facility sort of equivalent to doing it in Taiwan or doing it in South Korea. But this is not a free pass. This is not a 10-year kind of extension of Intel's life to do what they want for free. It's a considerable help, but we're going to need more money if we want to create that basis.
Meanwhile, the real gem of the chip ecosystem in the US, NVIDIA, has still been going out there discussing its future plans, its vision for an AI-focused reality. Ian, what are we learning more from NVIDIA, and also who they're bathing in their own glory?
Anybody that Jensen Huang mentioned during his massive keynote, the stock got a bump, and my colleagues on the market team wrote a good story about that, so have a look at that one. And that's exactly what's going on here. They are absolutely central to what's going on. The big message was, hey, here's a great new chip. Of course, it's twice as good as the previous one, but don't worry too much about that. There's servers, there's networking, there's you name it, and we're going to bring this technology to everybody. It's not just going to be for Amazon. It's not just going to be for Microsoft. We're going to put it out there for corporations. Hyundai shipbuilding is going to be using AI to make better ships. It's everything. That was the big message that they kind of rammed down our throats over the last couple of days.
It's Samsung up the most in 6 months after getting Jensen Huang's blessing a little bit earlier. Ian King, across it all in the world of chips, we've got more to come. We thank you so much. Meanwhile, coming up, look, let's just check in on the implication of the chip market on the rest of the markets. Remember, Magnificent Seven still driving us to new highs yesterday. Where is it going in the future? Principal Asset Management Chief Global Strategist Seema Shah joins us. Ed, what are you looking at?
Well, I'm looking at shares of Micron because we're at the tail end of earnings season, but Micron, memory chip maker, incredibly important. DRAM, highly commoditized, and we've seen recovery in DRAM prices, and the street's expectation is that that will result in some feel good for Micron. Where do the memory chip makers sit in this AI story? We still kind of want to learn that. If they're building all these data centers, surely they need the memory to go in there alongside the GPUs and CPUs. Micron up 0.9%, and it's a big earnings print after the bell. This is Bloomberg Technology.
Ahead of the Fed decision today, the so-called Magnificent Seven, a few of them taking a breather, having powered benchmarks to new records yesterday. Amid all this AI hype, and indeed the reality being served to us from NVIDIA, for example, the latest unveilings, they've made some of these Magnificent Seven names the most crowded trade, according to Bank of America. So is this rally going to be sustained? Let's get into it. Principal Asset Management Chief Global Strategist Seema Shah is here with us, and to talk us through the macro and the micro, and just tell us how much you think, with the macro policy as it is, with the Fed as it is, whether or not the Magnificent Seven can continue to just own this rally.
Yeah, well, thanks for having me on. It's an interesting question right now because coming to this year, there was perspective that actually there was going to be a shift away from the Mag 7 into other parts of the market. But actually what we've seen is because there has been so much macro volatility, so much debate still going on about what the Fed is going to do, that you're still seeing that uncertainty mean that investors are looking for where they have safety, where they know what they can expect. And so that means that actually people's interest in Mag 7 has been maintained. And of course, there's always going to be questions about the frothiness of valuations. But actually, the clients that we're speaking to, they're telling us that they really do have belief in the expectations, the earnings expectations. So they're not too concerned about the froth, but they would like to find other parts of the market to also increase exposure to.
And let's talk about other parts of the market. Is it therefore a broader part of the AI ecosystem? You look at other names, other global names in particular. I think of ASML's done really well over there in Europe. We've done some other Asian names doing incredibly well. Or is it just getting into other industry groups?
So there's a bit of both. I mean, typically looking across to Asia for other parts of that tech space which can do well. But it is also about looking at just other parts of the market, other sectors and other regions which haven't performed as well, particularly in 2023. So there has been some, interest in small cap space, but really quite hesitant. But hopefully looking to see that once they know what the Fed is going to do, that they can start dipping their toes more deeply into that area. And then other parts of the market which really are not tech focused. Places like Latin America where valuations are really interesting, where the macro stories are quite compelling as well. So it is a bit of variation, but certainly what we're seeing throughout all of this is even as interest outside of the US tech space is growing, that still doesn't mean that then taking it away from US tech either.
I've been thinking a lot, Seema, about what's supporting the sort of large or mega cap tech space in the United States, right? Earnings are really strong. And even if you debate the timing of rate cuts, I think most people still think some rate cuts are coming this year. But the thing supporting all of it is like this investment cycle driven by AI. How much carry does that give us through the end of the year? If you call it a tailwind, for how long does the tailwind flow?
It's interesting because actually I would say that narrative for a lot of people is not just the interest for the rest of the year. I mean, it really takes up a very significant part of the strategic asset allocation, not necessarily the tactical asset allocation. The valuations mean that from a tactical side, this probably isn't going to be the time that you want to be adding your exposure. But most people are looking at this mega cap space and saying, okay, this is something which is going to deliver for the next 3, 5, 10 years and beyond because of the AI. So actually, I think that tailwind probably maintains and carries this space through to the end of the year. And obviously, look, the macro space is going to be important. But as you said, right now, the narrative is more about when is the Fed going to cut, not necessarily is the Fed going to cut. So certainly that does help the situation too.
I want to go back to the example of Intel because we were talking about it earlier in the show. If you just as a comparison put Intel side by side with the Mag 7, I think it's down 16, 17% so far this year. Just got $20 billion of awards from the US government. And it's another example of something supporting that sector at least, the CHIPS Act support. Do you expect investors to kind of pay that more credence in the back half of 2024?
So we are. And I think that is actually a really important story is we're trying to see, we know how the Mag 7 is done, but it's now about thinking about what are the second round effects, which are the other parts of the universe which are really going to benefit. And as you said, Intel is one perfect example, but also if you just look outside even the tech sector, looking to maybe towards agribusiness, healthcare, data centers, these are all areas that will benefit as a second round from technology. And that's actually where we're getting particular client interest of where can they benefit, maybe where the valuations haven't really moved up as much, but they do know that those segments of the market are really standing to have some serious gains over the coming years from all of the technology moves we've already seen.
Seema, you are a global strategist. You are a cross-asset strategist. I would like to do credit, but instead I go to crypto. And more broadly, is that something you're getting from clients? More questions as to whether that rally's run out a little?
Of course. I mean, when you see the moves that we've had in the crypto, inevitably that you're going to get a lot of questions. And the questions are, of course, is can it continue? But also what we're seeing is that investors are looking and saying, well, look, this has been legitimized now. And there is a real run rate. They accept that there's a ton of volatility associated with this. They have to have a fairly strong stomach. But again, they're looking at this as a long-term and a long-term perspective, not something that you can maybe trade in and out of. So certainly investors are trying to find, like, where are we going to get the significant returns that maybe we've enjoyed in previous years, but are looking a little bit more like, a little less likely over the coming years. And that is certainly where crypto is coming in more and more.
Principal Asset Management Chief Global Strategist Seema Shah, great to catch up with you here on Bloomberg Technology. Astera Labs indicated to open at $52.56 a share. That's pretty significantly above its IPO price of $36 a share. Shares indicated to open at $53 as of around 15 minutes past 11 Eastern Time, 15 minutes past 8 a.m. Pacific Time. It's a 46% premium on where they priced. Let's get straight to Bloomberg Deals reporter Katie Roof. Your reaction?
This is the excitement the IPO market has needed. There have only been 3 venture-backed IPOs since 2021. Astera Labs popping significantly, which, this is after already pricing above their revised range. They kept revising it higher because there was so much demand from institutional investors. And so the fact that Astera Labs roadshow went really well it proves that there is investor demand for the right companies, for tech IPOs right now.
And the reason that it's so well liked is, well, it developed semiconductor-based connectivity solutions. Basically, this is about AI, Katie. And do you think, therefore, we are needing to have this element of AI to get investors really excited at the moment?
Yes, that's what it seems like. This is definitely an AI-related company. They're in chips. And, that's been something that's drawn more excitement back to tech again. Obviously, 2022 was rough, and then 2023, people started to get more excited about AI. And now in 2024, we're seeing this make it to Wall Street and IPOs, and there's a lot of excitement there.
Let's get to the other technology IPO due in the next 24 hours. Reddit. Sources are telling us that we're looking at the top end of the range. The range was $31 to $34 a share, which on a diluted basis values Reddit $6.4 billion. What do we know?
So, technically hasn't priced yet, but we're already hearing positive indications about where it will price. They're riding off of the excitement from Astera, which helps, excited investors for tech generally. And, they saw how the market was trading today, and they're thinking already that this could go well. Technically, it doesn't get priced until after the bell, but, already it's looking positive for Reddit.
Yeah, it's got to be music to some of the banks' ears when we're at record highs and in the days before, the IPO being led by Morgan Stanley, Goldman Sachs, JP Morgan, Bank of America. Katie, this is a name that people have anticipated coming to the market for so long. How is some of the allocation going to the Redditors themselves? Because they want to ensure that their community is supportive of them going public.
That's right. They're allocating shares to some of their top Reddit users. And, the way this works is normally it's just Wall Street that gets access at the IPO price. Normally, an average retail investor can only buy after it begins trading on the first day, and they don't have access to much of that pop that we see. And so this is a way to kind of gift that to some of their top users. We have seen this with a couple of other consumer-facing IPOs now, but this is part of that trend.
I think what's interesting about Reddit is a relatively complicated history. Founded 2005, had a Y Combinator as well. Then bought by Condé Nast very quickly, spun out 2011. And as Carrie pointed out, we've been waiting a long time. There is also how this IPO is going to work. So some of the shares to insiders and staff, some of them to Redditors themselves. How does that impact the mechanics?
Sure. So, what we saw in this was that we had smaller than usual stakes for some of the institutional shareholders like venture capitalists. And that's part of that, because they were spun out of Advance, the Condé Nast parent. The founders had really small stakes, less than 5% for them. And that's not something we typically see at the time of an IPO. But, this is a company that's going public after being around for 19 years. That's really, really long for a startup to IPO. But again, this is technically the second exit for Reddit because they were sold in the early days and then now spun out.
Question is profitability from either of these companies as and when it's hit. Katie Roof, we thank you so much for breaking it down. It feels like a bit of an IPO mini frenzy. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. The Biden administration is toughening auto emission mandates in order to boost EV sales. In the near term, there's actually some easing in tailpipe requirements. But in the long term, it's going to be an EPA cap for car and truck tailpipe emissions through the model years 2032. The idea is that it will push the automakers, particularly the legacy automakers, to move more quickly in boosting their sales of battery electric vehicles. You look at some of the names on the board, we have both pure play and legacy OEMs on there that are making both combustion engine and EV powertrain right now. You'd expect that GM and Ford, as an example, will now get going more quickly, Caro. As I say, Biden tailpipe rule coming into a force and pushing those EV makers to accelerate their EV timelines.
Isn't it interesting that Seema Shah, we just had that conversation about how much regulation and US incentives are going to be changing some of the investors' mindsets, so across chips and cars. Meanwhile, let's just go to Microsoft for a moment. Get this, it's tapped DeepMind co-founder Mustafa Suleyman to head up its consumer artificial intelligence business, basically hiring most of the staff from his Inflection AI startup, as the software giant is trying to be fending off Google in the highly competitive market for AI products, really targeting consumers. Joining us now for more, Bloomberg's Jackie Davalos. And this is so interesting because once again, Microsoft getting in there with a really fan-favorite startup, this one an empathetic one when it comes to chatbot, but they're licensing the tech of Inflection and taking two of the three co-founders, right? They already have Reid Hoffman on the board.
It's a really interesting agreement between one of the biggest players in AI right now, Microsoft, and what was seen to be as a really promising AI startup. Now, both companies were pretty careful not to call this an acquisition, but nonetheless, the agreement effectively has Microsoft absorbing this team. For them, it means they get to acquire this massive talent. Mustafa Suleyman, as you mentioned, Caroline, comes from Google, and before that he co-founded DeepMind along with Demis Hassabis. This is kind of really pitting these two prominent figures in artificial intelligence in these competing roles. Now, for Microsoft, this is not just about the talent, but it's also about expanding into consumer, where they haven't traditionally been able to do as well as their enterprise business. So this is a fairly large advantage for them. For Inflection, on the other hand, there's still a few questions there as to what this means for the company. While yes, they get to run their technology on Microsoft's Azure infrastructure, what does this mean for investors? The company said yesterday that investors will be made whole. Even Reid Hoffman himself posted on LinkedIn saying that it would be a good outcome for investors. How and when this will happen is still yet to be seen.
I think there's more than a few questions with this. So when we put the story out on social media, people started calling it an acqui-hire. And then this is the most bizarre thing about the whole thing. OpenAI felt compelled to issue a statement congratulating Mustafa on his new role. And I think that we spoke to Nadella as well, right, Jackie? And he reiterated Microsoft's commitment to OpenAI. It's a very complicated situation.
It really is, because at the end of the day, OpenAI is a competitor to Inflection in many ways. Inflection runs its own chatbot, Pi, which it said it will continue to keep running. For how long, that's unclear. But for what we do know is that Inflection plans to focus more on enterprise business. Of course, that's right up Microsoft's alley. But at the end of the day, you have to kind of wonder how this is also going to play out within Microsoft, who's already under some pretty intense scrutiny by the FTC here in the U.S. about its agreement with OpenAI. This might potentially draw some more scrutiny. But again, I think we're still waiting on some of the details around what this means for the rest of the Inflection team. The company didn't say exactly how many of Inflection's 70 employees will be joining over, although we do know that another co-founder will will become chief scientific officer under this new Microsoft AI group.
Public companies, private companies making moves. Another example of a public and private company getting closer aligned. Bloomberg's Jackie Davalos, terrific reporting. Thank you. AI, let's stick with it and let's stick with private markets. Is also on IVP's mind, the 44-year-old Silicon Valley venture firm wanting to take advantage of the great opportunities it sees with this technological shift. And it's launching its 18th fund with a $1.6 billion raise. to bring in IVP partner Kak Wilhelm for more in today's VC Spotlight. Welcome to the studio in San Francisco.
Thank you for having me.
Let's start with the fund, 1.6 billion. Explain it to me. What is it going to be used for? What is the thematic focus, and how did it come together?
Absolutely. Yeah, so you mentioned 1.6 billion and 18th fund. That means, Fund 1 was back in 1980. Fund 1 was a grand total of $22 million. So as you can see, we've come a long way. We've invested through cycles, and I think the key cycle right now is AI.
But it's a crowded space, a crowded cycle, because you not only have the 1.6 billion early stage or...
So it's a good question. Venture means many things to many people. Venture is everything from, pre-seed and seed all the way to pre-IPO. We are squarely in the sort of super growth phase. So you're raising a Series B and a Series C. You have early data. We believe in you, your team, and your market, and that's where we're trying to hone in. Interesting, in venture, lots of people have moved to a platform model, so everything to everyone. We have consistently, over 18 funds, we've been really focused on doing this one stage and this one stage well.
Kara, I didn't mean to lose my train of thought there, but I was just reflecting, having been at GTC, that this is a space where it's not just venture firms jumping in.
Yeah.
You have strategic investors like NVIDIA as well. There's a lot of people putting capital to play.
Yeah, it's super competitive. And for that instance, when you're trying to therefore woo in this new era of founders and ensure that you're managing to write the right checks rather than, the corporate VCs at the same time, Kak, I'm assuming some of the past precedents really win out. I think of some of the exits that you've had, Datadog here in New York, I think of Klarna coming up. I mean, how much does that track record help show that you should be as part of that winning team for them?
Yeah, exactly. I mean, I think longevity really helps. I think brand matters in venture capital, so I think the brand of IVP means something. We want it to mean substance and soul. We want it to mean that we're your partner, we're going to lead the round, and we're going to be with you for a long time. Take, for example, Perplexity, which is sort of akin to, consumer AI at the moment in the zeitgeist, and that's one where we, hard-fought battle for the Series B, and we were competitive and we won.
What do you make, therefore, of inflection going with Microsoft and a future of Perplexity? I mean, it feels as though the big tech companies are not only writing with their VCs, but they're also making these very extraordinary partnerships that end up feeling like M&A.
Yeah, I mean, on this one, you guys were discussing earlier, I would this inflection deal it sort of smells like an acquisition, looks like an acquisition. I think everyone's focused on the CEO and his move and his role at Microsoft, but I think this does sound and smell more like an acquisition than it does anything else to me. I think what it does is, from the perspective of a Perplexity, for example, very focused on Google and their positioning vis-a-vis Google. I think Microsoft historically, conventionally, has been very much an enterprise business. So I think what this does is this puts Microsoft consumer on the map in a way that maybe people hadn't appreciated more recently.
Thinking of consumer, I'm thinking of, Klarna, for example, as one of those companies that is very consumer-facing, is looking at tapping the markets itself. We today are anticipating a non-consumer business, Astera Labs, coming to the market. It looks as though it's going to it's going to start trading well above where it priced. We've got Reddit tomorrow. How do you feel about the exits at the moment, not only just big joint ventures, but the public markets?
I'd say we're cautiously optimistic. I mean, if you look back on history, look at 2021. For IVP, we had 15 IPOs in that single year. That's of 130 total over, we discussed, since 1980. So those heyday, that heyday, we all lived it. Maybe we want to go back, but those days are probably over for the next, ensuing years. I think, again, we're cautiously optimistic for this year. We don't think it's going to be more like 2021, but, Reddit and these others suggest that there are companies in the wings that want to get out.
I'm interested in where the 1.6 billion is coming from in the context of exits, but also the competition. We are obsessed with the Fed because we're Bloomberg and that's all we talk about. But who would be an LP right now in a venture firm like yours? Are they kicking down your door and saying, I want on that fund? Or was it difficult to bring the fund together?
Yeah, a little bit of both. I mean, we started in 1980, and so we have an investor base, many of whom have been with us since 1980. That is a makeup of a lot of US and Europe, sort of mainstream LPs. That being said, if you had taken a pulse check with me 6 months ago, 5 months ago, 4 months ago, I would have had different answers for you. It wasn't straightforward. I think you guys know as well as we do, it's been a tumultuous several years, and the liquidity constraints, the optimism of our investor base has really varied over time.
one of 7 GPs over there, IVP, of course, oldest one on the block when it comes to Silicon Valley and CAC. We didn't even get into your running prowess and how that's all going. IVP partner, CAC Wilhelm, we thank you so much for coming on and talking about the new fund. Meanwhile, coming up, look, we've got to get into that IPO we're just mentioning. Astera Labs, it's about to start moving on the NASDAQ. It priced. Now we're going to see where it starts to trade. CEO Jitendra Mohan's joining us. Ed, what have you got?
I want to go back to those kind of legacy automaker and EV names we were watching. The Biden administration is bringing in tougher tailpipe rules, effective or capped through model year 2032. They actually ease the short-term requirements, but the idea is make long-term tailpipe emissions regulations tougher now to get some of those names like GM and Ford to move more quickly on transitioning to battery electric. There wasn't really a knee-jerk reaction in the moves of these names, but you do see some of them higher. Rivian softer 1.3%, but Rivian has got all kinds of problems right now, which we will continue to report on. This is Bloomberg Technology.
We've got to talk IPOs. We've got to talk the listing day of Astera Labs, which provides purpose-built connectivity solutions, basically for artificial intelligence and for cloud infrastructure. Company will soon be busy trading on the NASDAQ under the ticker symbol ALAB, ALAB. Here for more is the Astera Labs CEO, Jitendra Mohan. Jitendra, you own, about 6% of a company that's going to rocket to more than about a $10 billion valuation. How do you feel?
Feels great. Feels awesome. It's not about me, though. It's if you think about Astera, it's really all about the people who have helped us get to this valuation, and it's the people who are going to push us to new heights. So very excited about today.
Jitendra, good morning from San Francisco, and sorry to interrupt you. Just a few minutes before you joined us on the program, Bloomberg reported that your stock is indicated to open at $52.56 a share. That's a 46% premium on where the IPO priced. What's your reaction to that?
I think stock market prices are something that we should be aware of, but not let them drive us. It's my philosophy. I think it's an indication of the confidence that our investors are placing in us. So we are very, very glad, have a lot of gratitude for them. But we'll keep our heads down, continue executing, continue building products.
And let's talk about that execution that's driven your revenue to last year $116 million, almost doubling. But you've still got a net loss of $26 million. When do you think you will be able to provide that profitability that so many investors want to see?
So we declared that the last quarter we were indeed profitable. A focus for Astera Labs from the inception has been to build a strong business, one that can stand on its own 2 feet, without external support. And that's what we've been doing for the last 6 years. We turned in a profitable quarter last quarter, and we will continue to drive our business forward in the coming quarters and years to come.
Jitendra, there were no fewer than 271 mentions of the word AI in your most recent SEC filing before this morning. And I think it's worth discussing what Astera actually does, right? You make the hardware or the chip that allows for the high-speed connection between different parts of the server rack, or as is now more commonplace to call it, the compute platform. How are you actually benefiting in the real world from this AI infrastructure build-out that we're seeing before our eyes?
Yeah, that's a great question. And let me give you a little background. So whenever you enter a query into a ChatGPT, or you look for a recommendation coming from Netflix or Amazon, what happens in the back is in a data center, hundreds of thousands of computers, many times based on GPUs, come into action, and they talk to each other very, very rapidly at very, very high rates. And in fact, the rates are so much that they are not able to talk very well together. And that's where our products come in. We enable the CPUs and GPUs to talk to each other. A great analogy might be one of running a race. If you want to run really fast, you will get tired. And so you run a relay race. You start from one point, you run very fast, pass the baton onto the next guy, and continue forward. That's what our products do. They enable all of these brains that are behind AI to talk to each other very fast and very reliably.
Briefly, you've raised $730 million. What are you doing with it, Jitendra?
We have so much opportunity in front of us. We are in a very unique position where our customers are coming to us and telling us, build me this. You guys are good at semiconductors. You can build hardware. You can do software. We've earned a trusted advisor status with our customers. and so much opportunity in front of us. So we will use this money to really accelerate the product development that we've done. Hire more people. If you're watching this and you're looking for a job at Astera Labs, please apply.
Astera Labs CEO Jitendra Mohan, great to have you on the program. After Hollywood filmmaker George Lucas showed support for Disney CEO Bob Iger in his proxy battle with activist investors, let's get the take of Gerber Kawasaki CEO and President Ross Gerber, who's posting on X that Nelson Peltz, quote, does not know his way around Hollywood or anything related to the entertainment industry. Ross is here with us on the program. So I guess the latest piece of news is what we reported on Tuesday, that George Lucas, who sold his production house to Disney for stock, is coming out and saying Bob's the man. Does that carry weight for you?
100%. I mean, George Lucas is like one of the geniuses of Hollywood. And Bob Iger, who, I've met and talked to many times, is like one of the best CEOs in like America or maybe the world, but also one of the best CEOs in Hollywood. And like getting this deal yesterday with ESPN in college sports, getting Taylor Swift on the platform, these are the Bob Iger effect that people like Nelson Peltz, who just like do financials, he should worry about Ben & Jerry's and Unilever versus getting involved with companies like Disney and Hollywood, which are really, really hard to understand how to make money in Hollywood. Very, very few people ever have, and Bob Iger is one of them. So we support him 100%. He's a great person, a great leader, and George Lucas as well, one of the great creators of our time. Basically, everybody supports Iger except Peltz.
And his former CFO, who would have known how to make money in Hollywood before.
And I'm actually okay with replacing one of the board members with Joe Rasulo, especially somebody like Mary Barra, who has no reason to be on the board of directors at Tesla. So, like, I don't think Disney. It's a horrible thing to have one board member switched for one of their picks, especially Joe. But, like, in general, Disney's doing well right now, and they're doing everything they need to do to fix the business.
Just real quick, I think you said Tesla, but you meant Disney?
Disney, yeah, I'm sorry.
No, I know. Elon's on your mind a lot at the moment. I get it.
People ask me 12 times a day.
Let's not go there, Ross. Let's not go there. Let's stick with Disney. We're speaking so much about a proxy fight and an activist investor battle that actually I don't think we've got any real good sense on how things are going at Disney, because the accusation from those that want change, like Nelson Peltz, is it's not going very well, right? That's why they want change. But what do you feel about the performance of Disney's streaming business, its studios and its parks?
Well, that's not the vibe I'm getting, and I live here in Hollywood and, have deep connections through the entertainment industry. Disney and Hollywood is going through a major retrenchment now on what they're spending on streaming and what they're spending on shows and what content's being made. And it's not just Disney, it's Netflix, and many of the other players are really looking at profitability now and with the ad-supported streaming services. But Disney streaming service is doing just fine. Shogun is a great show. It's the number one show out there. If you haven't seen it, amazing show. They've got really Taylor Swift on the platform. So Disney Plus is doing well. ESPN is making all the right moves they need to make to move into the next stage for its growth. And Parks and Resorts is great as well. They just need to make some good movies. That's the only thing. And the best person to make good movies is Iger and his team. There's nobody else that I would trust doing that.
Or they can just license Ares Tour, which got 4.6 million views on Disney Plus apparently in its first weekend. So go with the hits. But Ross, I am interested in the successor. Eventually, as much as you love Bob Iger, he's got to go in 2026. Who do you like?
Well, the truth of the matter is I've been around since the Eisner era, so until he's actually gone, I don't know if I believe somebody's replacing him, because, Bob Iger's in phenomenal shape, and if Joe Biden's running for president, certainly Bob Iger can run Disney for another 10 years. But that said, I'm really, really partial to, some of the teams that have worked with them in the past, and especially people who've worked on Disney Plus and some of the other things. So there are many executives that they're talking to, that I have a lot of faith in that could replace him, but I still think it's really up for grabs. And right now, I'm happy Iger's still there, you know.
Gerber Kawasaki CEO, President Ross Gerber, always great to catch up with you. Thank you so much.
Thanks for having me.
Meanwhile, well, that does it for this edition of Bloomberg Technology. Boy, what a busy show, Ed.
Yeah, it's interesting how there is this kind of little IPO euphoria window of the next 24 hours. Recap the Astera conversation in particular on the pod. Apple, Spotify, iHeart, the Bloomberg platforms. So many of you are checking out the pod on your way to work or when you're on the treadmill, whatever it is. Tune in daily from New York and SF. This is Bloomberg Technology.